Hello everyone, I'm Kate Hill, bringing you the best, unbiased and honest content on property, along with awesome hints and tips. Stay tuned today for all your latest property news. The Federal Treasurer, Jim Chalmers, spoke of Australia's housing crisis during his second budget speech to Parliament on May the 9th, offering a platter of solutions to ease pressures on renters, first home buyers and investors to pave the way for new home builds while not adding to inflationary pressure. The budget outlined key areas to create more affordable housing, help more Australians into home ownership, invest in infrastructure and support growth in regional areas. Now, I've outlined the actual budget measures in the description below because it's just going to take too long to go through them all here. In response, the Real Estate Institute of Australia said that the Treasurer tried to deliver a budget that fights off inflation and helps Australians that are struggling in the context of global economic conditions, and anticipates that inflation will return to RBA's target band by 24-25, with inflation to reduce to 3.25% next year. They applauded the budget increase of Commonwealth Rental Assistance of 15%, but housing supply at scale still needs to be addressed. The Property Council of Australia said that the real story of this budget is the 5-year net overseas migration total of almost 1.5 million people out to 27. Skilled migrants are essential across most sectors of Australia's economy, and a strong influx will benefit the property industry and underpin our attractiveness as a global investment destination. At the same time, these are large numbers of people that we now need to accommodate. So without proper state housing targets, improved planning systems and well-located housing choices for students, retirees and just normal renters, we will see the national housing deficit blow out even further. Nerida Conisbee of the Ray White Group said that there is a shortage of properties to rent and to buy. So unfortunately, the budget measures to fix housing supply were limited, and there was nothing to fix the challenges in the construction sector. Another emerging problem is that house price growth has started up again. More on that shortly. Despite 11 interest rate rises, the shortage of homes is moving from a rental problem to a pricing problem. Change to build to rent will go some way to addressing the rental supply shortage, but this is still only an emerging solution, an emerging source of rental properties. Most rental properties, well over 80%, are supplied by mum and dad investors. An incentive like Home Builder being available only to investors would be a quick way to address the rental shortages. Although construction material prices are coming down, labour shortages are still apparent. Ideally, the lift to the international migration cap will address this, but it's going to increase demand as well. Once we start to see construction prices stabilise, it will mean more normal levels of housing supply to a degree. If the Housing Australia Future Fund is approved, this will provide an additional push. Now, PropTrack's April 2023 Home Price Index reveals that national home prices increased again and have now risen for 4 consecutive months. The 0.14 growth in April brings the cumulative 23 increase to 0.75. Tight supply continues to underpin prices alongside stronger housing demand, which is offsetting the impact of interest rate rises. The report shows us Adelaide, Sydney and Perth recorded the largest increases in April, while Hobart and Canberra and Melbourne experienced slight falls. While rapid rate rises were the primary driver of prices falling for much of last year, which is debatable, the deterioration in affordability is being counterbalanced by stronger housing demand. The strong rebound in immigration, shortages in rental supply, and a softer flow of new listings is underpinning home prices. Home prices in Adelaide saw the greatest lift in values out of all the capital cities in April, with home prices rising 0.41% to reach a fresh peak. Home prices in Perth increased also by 0.21% to a new peak. The comparative affordability of both cities has seen these markets outperforming throughout the past year. Low stock levels are also helping to insulate home values. Regional South Australia continues to record strong growth. Prices rose 0.16% in April to a new price peak and are now 10.28% above their April 22 level. Sydney home prices rose 0.4% in April, and it's been the strongest performer so far this year. Sydney saw the largest correction, with home prices falling 7.2% from peak to trough, which could be another factor buoying the buyer interest. After climbing 1.7% over the past 5 months, home prices in Sydney are now down 5.62% from their peak. It was a big peak. In recent months, home price growth has been stronger in the combined capital cities than regional areas, which is a bit of a turnaround, with the regions recording flat growth in April for now, and the capitals recording that 0.2% uplift. Home prices fell 0.27% in Hobart, and after 13 consecutive months for price falls are now down 6% from the peak recorded in March 22. Ongoing price falls in Hobart follow several years of strong price growth and relative outperformance. Home prices lifted in Melbourne over the first few months of the year. However, they've recorded that tiny 1.11% fall in April, with the end of interest rate tightening in sight. Much of the uncertainty buyers have experienced with respect to borrowing capacity and mortgage servicing costs should subside. Alongside the rebound in immigration, tight rental markets, there should be sufficient buyer demand to help keep prices resilient. Home prices in Brisbane have risen for 4 consecutive months after increasing 0.14% in April. Strong housing demand is offsetting the deterioration in affordability. Now, whether this stabilisation continues or prices resume their fall will be influenced by the level of supply. It's not a lot, as well as the trajectory of interest rates. Queensland also has the fastest growing population in Australia. New supply will struggle to keep up with growing demand, which further underpins home values. So, people, what does all that mean? Well, don't believe everything that you read. Once again, Australian economists, as much as we love them on one level, have read the property market completely wrong. They predicted the prices would drop in 2023 with a 15 to 20% decrease in prices from peak to trough. They were completely wrong. Prices softened by about 9%, but only in some areas, and are already on the way back up. Economists base their predictions on interest rate rises, putting a dampener on house prices, and that is it. Instead, a nationwide rental shortage, increases in migration, a lack of supply has kept demand high and prices very stable. Commonwealth Bank admits that it was wrong. We did not pick, they said, the turning point in this cycle, as we expected prices to continue to trend lower until the third quarter of 23. Shocker. It has revised its forecast of a 6% drop this year to a 3% increase. Westpac, which tipped an 8% drop this year, said it will be a 1% gain, and ANZ, which tipped an 11% drop, has changed, says prices will remain flat. It's already been proven wrong. Now, I will keep you posted on all things property from around Australia. As always, don't forget to hit that subscribe button, give my video a little like if you are enjoying the free content, and I will see you all again really soon. Bye.